if last year Chamath could have spacked Cooper Flagg, he would have. Welcome to the Kingscrowd Podcast. We're going to switch it up today. I am the insider from the industry who is not the host of this show, and Brian Belley, who is the host, who is the VP of Product and runs data at Kingscrowd, is here. He's typically the host, but they've handed it off to me for no apparent reason. Teddy Lyons, who's our senior investment associate, and our other senior investment associate, who I think this is actually why I'm introing this, because they know I can't pronounce her name, Léa Bouhelier-Gautreau, is joining us to talk about what I think is either a big trend we're about to see, or this is a complete aberration, one-off, and it's just a very coincidental, interesting time to be living in this modern private retail finance world that's coming together seemingly day by day. Where we're going to go, we're going to revisit. A couple weeks ago, we talked about Gigastar, which raised, I believe, their max, or they came very close to their max campaign. And Gigastar is close to home for me because, full disclosure, Kingscrowd and Gigastar share a main investor in Belvedere Trading, Belvedere Capital. They're also Chicago-based, or at least part of their company is. And effectively, they're allowing regular individuals to invest in the upside of creators. They're very creatively putting it together in a form of a combination of equity and debt. There's the ability to basically get paid back a portion of the earnings in real time from YouTube ads, podcast advertisements, sponsorship events, product merch, etc., which is the bedrock of the creator economy. They raised, correct me here, is it Start Engine or do they do WeFunder?
WeFunder. They're on WeFunder.
WeFunder. They're on WeFunder. We will walk through that exact deal a little bit and revisit what it means. Coincidentally, there's another campaign that's running in another platform called CrowdSurf, which enables people to invest in the upside of individual employees, people who are either starting companies, maybe they're creators, maybe they're, I don't know, we'll see. Maybe they're accountants, maybe they're lawyers, I don't know. Anything in that realm. And that all coincides or dovetails with a story that is not the first and certainly won't be the last of a professional athlete who took capital as a form of early pay in exchange for future earnings. And that is Fernando Tatis, who's an all-star MLB player. There's also a few other MLB players who have participated in such trading of future potential for early cash, who've gotten themselves into some hot oil over gambling and other such things, which just really doesn't look great, but it also shines a huge light on, like, there is a huge market. There's obviously long-term potential, but there's obviously also no different than venture long-term risk. So without any further introductions that I won't be able to sufficiently do, I'd like to turn it over to my co-host today, who's actually usually the host, Brian Belley. Brian,
excellent intro,
welcome
Scott.
to your show.
No, excellent.
Welcome to your
show.
show.
You should do it every time. That was great. Yeah, so in the past, we briefly spoke on Gigastar, but I think that Scott is pointing out, and we can bring it up again, they've been doing their raise on WeFunder. Again, Gigastar is one of these platforms that lets you invest in creators, basically in YouTube channels, and they've exceeded their goal. So their max goal was 1.2 million. They are currently at 3.4 million. Now, it's anyone's guess if they're going to increase that maximum, but as of right now, they've hit their maximum goal. So basically, you would be joining the wait list or getting oversubscribed at this point. But the trend that Scott's referring to, right, is if you are a creator, if you're a YouTube creator, if you're a sports person, right? So if you have a contract with the MLB, or you could think any other professional sports leagues, this one here is showing Emmanuel Clase, who's one of the people we're going to be talking about. And then obviously the other one that Scott mentioned, Nick Luciano. So I will, I think, hand things over to Léa or Teddy, if you've taken a quick look into, the Nick Luciano raise on CrowdSurf, are there any takeaways there? But this is definitely a trend we're seeing a lot, where these aren't your typical startups, right? These aren't operational companies necessarily, but you are getting either rev shares, or in some points, and some of these, you're getting tokens or equity in the creators themselves. Léa, let's start with you. What do you think, if you've taken a look at some of these, what comes to mind?
So the Nick Luciano raise, if we look at it on CrowdSurf, the first thing that really hit me is that the wording kind of says that we're investing in an individual. So you can see here at the bottom left, we make the individual investable. And at first, I thought that we were investing in Nick. And I was wondering, what does that mean? Does that mean that I'm going to share? They kind of said the individual assigns the future income and equity to an entity. And that entity that I've looked at, if you look at the Form C, it's just named Luciano Media Issuer LLC. So you're actually investing in a proper business entity, which is an LLC. You're not just randomly investing in some guy without any security. You actually get equity. But if you look at the description on the race page of Nick's revenues, you can see that it's kind of broken down into a couple lines because Nick is a creator. He is a creator. He has 7 million followers, and he kind of has side businesses where he makes money also thanks to his following. Looks like he has a mental health subscription of some sort that gave him about 90K ARR. And if we look down, further below on this page, right here in the financials, we can kind of see a breakdown of the revenues of that LLC. So we have platform revenue that comes from content creation. We have the brand deals, merchandise sales, as we're saying he's selling merchandise, and subscription membership, he has this. So he kind of is selling the revenue both from his content and from his just product sale, subscription sale. What was a little bit confusing to me at first is that it is kind of claimed that you're investing in someone. So I'm wondering if Nick were to get a side gig, does Nick have legally the right, the obligation to get this income to go through that LLC? And does that mean I can get a share of that LLC? Or is it just what is encompassing the media business, the media related revenue of Nick? That I wish the race page was a little bit clearer for investors on that. If you look a little bit down further, right here, projected growth in revenue, I think that's just very funny to look at. They're kind of trying to explain to us what are the type of revenue we can expect. And you have 10 life scenarios. The first one being Nick is completely burnt out. He wants to stop doing content creation and we don't get anything. And the 10th one, not really probable, sorry, Nick, is that Nick becomes the next Mr. Beast and we all become super rich thanks to his income. But overall, when you invest, Nick is raising $140,000 in exchange for 10% of his revenue for the next 15 years. I think that this is kind of a lot. And if Nick makes it, that could be an interesting investment opportunity. Now, I don't know if this person is the first time I hear about him. Not sure if there's actually a potential here, but I feel like if you're a follower of Nick, if you like his content, if you already are a subscriber of his products, it could be interesting to try to get revenue from that. One last thing that I'm wondering is why will Nick try to raise equity on his LLC? Is that something that could replace maybe at some point the bank's debt? And does that mean that me, Léa, if I want to, just get people to buy equity on my own career, can I do that? Try to raise money, I don't know, let's say to pay for a degree or whatever, and then I promise that I'm going to share a part of my income. And I think one of the big questions Teddy was asking as well is how is that going to be enforced? And same thing, respect Nick, I'm sure he's a good guy, but is there a way where an individual could kind of hide their revenue but not really declaring them through the LLC and therefore be able to keep them? So just a lot of questions here.
Brian, if you can go back to the page where it goes through itemized list of his things, I think there's a couple of things to call out here. I know you guys talked this week about Substack, and I think it's kind of an interesting shift in creator. If you scroll down a little bit here, they've got there we go. So let's just zoom in on subscription membership. I think it's super interesting that in 23, when he clearly had less followers, his subscription membership was 47,000 declared, and now it's 31, getting away from his desire to offer specifically weekly content. I think it's showing that there's a certain loosening of people willing to pay subscriptions for things that are even if they are consistent. He then pivots over again to brand deals, and you see he grows his following to whatever it was to call it 7 million. I somewhere else it showed what it was. I want to say it was he went from 2.5 million to 7 or something like that, 88%. Well, it doesn't matter. He grows substantially between 23 and 24. Mm-hmm. And he starts moving into brand deals, which are, again, not sticky. They're tied generally to the size of your following and less about the engagement and less about recurring revenue, which I feel like is one of the big scary things to me in the entire creator economy. And then also, of course, this, if you want to call it part of the gig economy, as an investor in the space, I already don't have guarantees, let alone month over month returns. So it's just, I think he's trying to de-risk. I think he is seeing the opportunity to de-risk what he already sees at the top of the spike, which is that revenue is very fleeting and it comes and goes and the algorithms shift. And all of a sudden I went from like somebody who was able to access a ton of people and get them to subscribe to people who were like, oh, I'm not receiving the content. And so I want to be, I unsubscribe. And he doesn't want that. So he's like, how do I make sure that I have some income for 25, 26? And he sells away 10% of his potential future for $140,000, which again, I do not know Nick. I'm sure he's great. I've never checked out the content, but I'm sure it's great. This is first I've heard of it. But I would also argue, and this is like part of this is why I like Gigastar. We'll talk a little bit more about it, but it's also why I'm skeptical. And as a person who spent a lot of time in the creator economy, I think I have a good enough handle on it to be skeptical. If you've got 7 million followers, how come he only has 10 grand invested? Because effectively, I could be saying, hey, I'm such a huge fan that I want to own a piece of your revenue because I am the money. I'm just getting my money back. If I invest $10,000 into you and I get part of that as one of the perks is access to your content, effectively, if I think you're going to grow and you're huge and I love it, then I should be getting paid more. So it's a little interesting to me that he does not have again, I don't know how long he's been running, but it's interesting to me that he's not raised a bunch of it. I think also, unlike some of the baseball stuff we're going to talk about, which generally are tied to career earnings, this is a length term of 15 years, which in creator economy is like his like 30s. So that's basically his peak earning years. So like, I guess it is his career for all intents and purposes. I just think that there's going to be more of this. I think this is more than just a weird thing. I think there's a trend of people have been trying to figure out how to monetize everyone individually. I just think it becomes very hard for all the things that Teddy said. And we're literally looking at these in real time. These have come, we've heard about these before. This isn't the first time, but we're seeing them kind of coming with a little bit more sophistication than the past. And I can't help but think of like Commonwealth and what they do with the horses and stuff. And it's like, you're basically not to compare humans to animals here, but when in Rome, I kind of think that we're trying to treat the creator driver similar to how we treat animals. And the difference there is that for a lot of very, very good, important historical reasons, there's not an ownership contract on the human the way that there is on an animal or a race car or a sports team or whatever, which is all revenue is reported, all revenue is taxed, all earnings are documented. There's breeding contracts. There's just a lot of infrastructure to monitor and monetize. And I think we're entering a world where people are trying to create the same kind of scenario on humans, but we don't have that kind of an infrastructure around us to do this, which makes it really hard. Yeah. It's fascinating, but it makes it really hard. And that's leaving out what we're going to talk about in a minute here with regard to what happens in the negative.
Yeah, I just want to add 2 quick notes to agreed with everything Scott's saying. I think we're going to see more of it. I think this could really work for a lot of the creators themselves who have the huge followings to be able to let them invest in them and kind of share in the potential upside. You probably get increased engagement from those people once they become investors. They're probably going to tell other people about it. Like there's other non-monetary benefits that the creators will get from doing this type of thing. Now for the call it general online retail private market investor, are you going to be looking through all these opportunities and trying to pick who the winners are going to be? I think that's a lot harder. Just for this example, I pulled up the Form C. As you probably saw, I was kind of poking around, but the first thing I went to is you have to disclose your use of proceeds with any online capital raise. We did actually find in the investment memo back on the deal page, it does have the use of proceeds. So proceeds from the offering will be deployed to evergreen merch drops, DTC funnels, full-time editors, etc. Now the question is, is that the only thing that he's going to be using that towards, or is there some flexibility there? But transitioning to the next topic here, this was one of the questions when Finlete was doing some of their raises. I asked them in one of their webinars, are there restrictions? Like you're going to write them this check. Okay, Emmanuel Clase raised $316,000. Can he only use it for sports related things? And their answer is no, it's up to them. It's basically a blank check where if he thinks the highest return of that would be paying for an apartment for his, mother or paying for a grocery delivery or whatever else, they can do it. So it really sets the bar kind of high if you have to trust that that person is going to use those funds correctly. But transitioning to this next topic. Yeah. So Finlete is another example of this. It's a little bit different in that it is structuring these contracts around essentially professional sports contracts. So in the case of Emmanuel Clase, a world-class kind of closer in the Major League Baseball, MLB, and recently it was in the news because potential allegations around sports betting, which talks to the downside of this, where I think he was put on paid leave, but potential of fines, potential of other things, and all of that potentially eats into investor returns. So, Scott, I know you do a lot kind of on the sports side as well. You have a lot of interest there. What do you think in terms of Finlete and these compared to, some of the YouTube creator type contracts? Is this the same thing? Do you look at it a little differently?
I think it will end up the same. It's different now. I mean, look, if last year Chamath could have spacked Cooper Flagg, he would have. I mean, like, it's literally like what we're doing. You said it yourself, a blank check. This is a blank check contract, which, by the way, I don't have a problem with. These guys are trying to take earnings off the table because they know that they are one injury away from it ending. And obviously modern medicine has made it a little safer, but still in creator economy, it's the same thing. We're one algo tweak, one AI fake bot, one scandal away from ending. It sucks for Finlete that, like, the chances of betting on a player, I don't, pun intended here because he gets in trouble for betting. I literally did not mean that to happen. But picking a player and them actually making it through the system and ending up, like, not just making to the show, but like being legit good is incredibly long odds. And for them to then immediately get busted in a gambling scandals, like, what are the odds of this? And ironically enough, another player who was part of this is Fernando Tatis, who is another person who was not projected to be some superstar player, ends up becoming a superstar player, drafted by the White Sox, ends up on the Padres, is a stud, and he gets tied up in a steroid scandal. So it's like the two biggest name players were incredibly long odds to make it, yet they do anyway, and then only to see it blow up in your face. And I guess I want to, like, it sounds terrible, but it's not really that different than betting on venture. How many of these stories, maybe they don't end up in scandal, but how many of these stories do we see of, like, so-and-so company raises money, ends up a darling unicorn, and then the company just shuts down because shit didn't work out? Like, that is the risk of what you're betting on. That's also why they're making equity available at a discount, right? Because they know that there's either a risk or whatever. What I would like to see, what I think will happen, I would literally, to put a bow on my jokes, bet on it. I would literally bet on the fact that you're going to see a sophistication layer put in here where there are clauses and these people are treated no different than the contracts they're signing with pros. If you are tied up in some sort of scandal, there's some sort of way or mechanism for me as an investor to get returns. It cannot be just part of the risks of upside. It's one thing to have a blown out arm or an algorithm change or something that's not within your control. It is completely a different thing to be responsible for your own detriment. And in that case, maybe it's something as simple as, like, I have the right to my money back and there's some kind of claim or whatever the case may be. I think that another thing that, quite honestly, would be really wise for the creators themselves, and you could probably argue that athletes at this point are becoming creators, is that you basically put an entity around your business, much like A-Rod has done, where it's like, I'm gonna blur the mirror here a little bit between athlete and creator. But if I create an entity that is my brand, this is like my YouTube channel, the ownership and the naming rights and the whole piece of that, the brandability to that, the identity, personality rights, that's all included, and it's wrapped around a utility SPV. And it's like, when you invest in this, it's very clearly stated you own, up to X percent of this brand, of Kingscrowd.com and all of its, glory. And then if I do merch deals and other things as a result of that particular part of the media, it all is funneled into it. It's all very clearly stated. If I decide to sell or to end that series, then we all get a payout, as do all of my investors, tantamount to what I took in the deal. And I can, of course, turn around and start a brand new thing and do the same thing all over again, much like a founder or business person could do. And I think the same thing is in the likeness business of sports and athletes. Like, part of this could be your sports contract. Part of it could be running a parallel campaign at lesser value based on what sponsorships and other opportunities I'm going to have result. So I think that is where this is going to go. I think you're going to see a lot of it. I think you're going to see a lot of fake bullshit, athletes and creators that never make it or never were going to make it, and they scam it, and you got to look out for it. But I think Léa brought up a really interesting point in this of, like, is this a way for me to use retail capital to start businesses and not go to a bank? And I tend to think that 100% it is. I think that regular Joe or Jane probably can't access that kind of retail capital. Like, you could surely pay to do a campaign, but maybe no one will put in on it unless your idea was just, fantastic, which is basically crowdfunding anyway. This would be a scenario where I have enough income coming in, enough revenue coming in that I wanted to offer up a piece of equity in my business or in my identity or likeness or whatever. And maybe it's in the form of a debt deal. And I think that's perfectly fine. And in fact, I would be really surprised if over the next 2 years, there's not Mr. Wonderful deals left and right, which are revenue, borrowing against your revenue until I'm paid a certain amount, and then equity over a period of time. And then the question just becomes in the creator space, and athletes included in that, like, what is an exit? Because that technically you don't need to exit yourself.
If you get a career,
Hulk Hogan
being acquired, by a company, like, it maybe gets into a gray area. And then in my mind, it's the next logical leap, which I know we've talked about, but how long until someone just creates an LLC around them as an individual, like before they've gone to college, and like, you know what?
What, didn't that exist already? There's a company that did this.
There's companies,
I feel like
Lambda School and others that were essentially that, but didn't let anyone invest in them, right? You had to be accredited. I'm sure they raised funds.
I thought there was another one that we talked about way back when, that Aspiron or some kind of deal. I can't remember, but they basically they were essentially, you could invest in my future earnings. So it's like, guy graduates in a degree in finance, and it's like, I can up to 10% of my earnings at said P McKinsey or whatever.
Yeah. But to Leia's point, exactly. Is that just become another form of alternative finance at that point, where you can do this to finance anything you can kind of come up with in terms of your professional. It's sort of a business. I think it has to be structured around that professional entity as an LLC or a C Corp or something. You can't just do it for Scott Kitun, individual. But
for now, I think, what's the difference between a founder and entrepreneur who's got the ability to generate a lot of returns? And I think that's definitely the company I saw, that they did the betting on the individual founder. That was where the investment was made, and it wasn't made in the company itself. So if the founder rolled the company and didn't finish it, and they go on another one, you still have upside in what they develop. That's what I'm thinking of. I don't know why I'm blanking. I could literally picture the kid that started it in my head right now, but I can't think of the company. Well, man, that's going to annoy me. He was on Technori Podcast years ago. Either way.
All good.
I think all this stuff is super interesting. I do think that we are going to become more and more creative. I think that you see the tokenization shift and all the things that are going on in that world. And it's like, it's pretty obvious that people are going to create tokens for themselves and their art and their content and their things. And you're going to see, the question to me becomes like, is that actually a business? Like, does it work? Mm-hmm. Will that pay out? I don't know. I don't know the answer to that. I don't even know how to entertain it, to be quite honest. Like, 1% of creators generate real money. 1%, 2% of athletes make it to the real show. So you could argue venture capital is like the worst investment on the planet, and that's kind of around 10% at least.
Interesting. Well, yeah, agreed. I think we're going to be seeing more. Any last comments, Teddy, Léa, on the creator economy and funding individuals?
Yeah, I think so. The Fernando Tatis situation, he's, I think, Scott, you mentioned he had a steroid scandal, but he's also kind of in this lawsuit where he got $2 million in 2017 before he kind of made it from a lender, essentially, and in exchange for a percentage of future earnings. And the kind of crux of that lawsuit is he is basically saying this company gave him this agreement was the equivalent of a consumer loan, and this company was an unlicensed lender. So therefore the entire contract is void. And I think before this kind of space of monetizing future earnings like really grows, and like we were just talking about monetizing a career or whatever it may be, like there probably is a lot of regulations and things that probably need to be defined a bit more clearly, so that I don't know. So that lawsuits like Fernando Tatis is going through that he launched doesn't happen that frequently. I don't know.
I'm glad you brought that up, Teddy, because this is actually a really old topic. Going back to like the 2002 Ohio State Buckeye football championship, Maurice Clarett signed marketing. This has been going on since the Ed O'Bannon, early 90s likeness NIL era, pre-NIL era of marketing contracts with nefarious people who pretend to be agents, and they sign a contract for a certain percentage of your future earnings on marketing. They say they're going to handle your marketing. It's a ripoff. It's just they're taking advantage of kids who come from probably low income, and they're just like anything to get some money ahead of time because whatever, man, they'll make millions, who cares? And this happens all the time. And the difference between this and even Fernando Tatis, which I'm going to guess was probably not a crowdfunding thing. It was probably more of a scumbag agent guy who did a marketing deal with him. We're now talking about merging this world of like the nefarious marketing deal meets the retail investor, and the exposure to retail investors just gets infinitely higher because my guess, once again, I don't know this, but the people who probably get very close to these athletes at a very young age, in my experience, have been not the greatest people. They tend to be kind of sleazy. And anyone who's hanging out at AAU basketball games with 15-year-olds with your hands out for money is probably not a great agent of trust. And that's the person, that's the bag man, so to speak, that's going to be going between these people and between the retail investors. So I'm naturally very skeptical of all these things until they have some infrastructure. And that is why we talked so much about Gigastar before. The difference that Gigastar is taking to this, just to reiterate for people, and we are not benefited by this at all, it's just a fact. Gigastar, as per what they say, again, don't know this to be true yet, they're coming off of incomes generated from like YouTube advertising. So you could literally track, this is a revenue generated from XYZ, and it's coming in and it's passed through and it's paying you based on that. That is very different in the creator economy, and for better or worse, whether you like it, tokenization, it does create more transparency.
I agree, Scott. And so I think with that, we will wrap things up for the day. The trend here, we're starting to see just more investment opportunities, more ways to raise capital for the entrepreneurs, for individuals. I think we're going to continue to see innovation. For those of you who stuck around for this conversation, I know it was a little bit of a tangent from, investing in companies, but I think all of this is definitely relevant just in terms of deals that you're going to see out there, trends to be aware of that are happening in the market. And next week, we'll get back on looking at the data, looking at other opportunities, investment trends, and deals. So thank you, everyone, for joining us. As always, also make sure you head over to kingscrowd.com. Sign up, get our free newsletter weekly delivered to your inbox. Great data-driven insights. You'll get this podcast. Make sure you subscribe to this so you get notified whenever we launch a new one. Until next time, we'll see everyone back here on the Kingscrowd Podcast.